Hello, good morning, everyone. Good morning, everyone. I believe we can hear me now. You're welcome, Johnson from Ogun State. Thank you, Luke. Thank you, Bukola Oni. Thank you, Yusuf Adeshola, Adeshino. I believe this is Colonel Abraham Uwenaze. iDevice. Google morning to you too. Thank you very much. Tajudeen Adedeji. Joy. All right. Thank you very much, everyone, for joining us this morning. Okay, it's a good time to get started. It's already 6 minutes past schedule. And usually we wait a few minutes for everyone in case you're having connection issues. So we try to allow like 3, 5 minutes for everybody to be for everyone to be on the same page. All right. So let's get started. Okay, so good morning once again. How are we doing today? Trust the new week has been great so far. Again, if you're just joining us, joining this session for the first time, this is our morning market review. And here we get to look at what's going on in the markets, and also with an expectation that would be able to pick a few entries plus trade ideas for today and even for the rest of the week. This session holds Monday through Friday from 8 a.m. So you get to meet with our analysts on a daily basis from 8 a.m. to 9 a.m. And also with the hope that when you have listened or you have joined long enough, you're also able to come up with your own profitable strategies that will give you an edge over the markets. All right. Having said that, let's get right to it. And as usual, we start with the majors, and from there, we start looking at other pairs that you are interested in. Just before that, let me quickly head over to Forex Factory so we can see if we have any important news for today. So just a second while I do that, switch to forexfactory.com. Let's check the economic calendar. It's also quite important to do that so that you can be mindful of the assets that would probably have news for today, so it doesn't affect your trade setup. All right, because usually when there is a news event, we would see very fast movements in the market. We'll see increased volatility. And if you are not prepared for that, it can mess up your trade setup. Okay, so let's check the ones for today. Forexfactory.com. I'm going to share my screen now. We'll give 5930. I believe you can see my screen now. I just shared it. I need us to confirm we can see the screen. I have forexfactory.com. All right, thank you. I see confirmations already. Okay, so this is forexfactory.com. And then today, Tuesday, July 23. Okay, not much in terms of economic events for today. Let me apply this filter. Okay. So just for the dollar, we have this medium impact news for today. If I over my cursor over that envelope, you're going to see the kind of impact that is expected for that particular news. And as we can see, this is medium. Existing home sales, Richmond Manufacturing Index, 3 p.m. for the dollar. You want to check more information on that, you can simply click on this open detail, and then you'll be able to see a summary of what that news is all about. What is important is the effect. And here we can see actual greater than forecast is good for currency. So what that means is that by the time it is released and the actual result here, this you can see this space here. There is no data. This was Monday, July 22nd. We got this for the actual result for that asset. So for today at exactly 3 p.m., the actual result here will be released. And then from what we saw on the detail, actual greater than forecast is good for currency. So what it means is that if by the time this is released, 3 p.m., and the result here is greater than the forecast, then it's going to be good for the dollar. Let's check this one if it's the same. Actual greater than forecast, good for currency. So we need these two results by 3 p.m. to be greater than the forecast for the dollar to be stronger. Okay, so that's it in terms of economic news for today. So it's a good time to head over to MT4 so we can check out the technicals. We really don't have much in terms of fundamentals for today. All right, so just a second while I do that, head over to the trading platform now. Okay, right there. So very quickly, I would also like us to confirm. So I'm sure we're on the same page. You can see MT4. So just type MT4 in the comment section, MT4. Just for me to confirm, we can see my screen and we all are on the same page. All right. FMSQ. All right. Thank you, everyone, for the confirmation. Thank you. Thank you. Thank you. Okay. So right there, starting with the dollar index. Now, the dollar index can quickly show us the strength or weakness of the USD so that we can then relate that to the major pairs. Now, what do I mean by the major pairs? Pairs with USD as one of the currencies. USD CAD, Euro USD, Pound USD, USD JPY, NZD USD. Any pair that in which one of the currencies is dollar, that's a major pair. All right. So, and once you can confirm the strength or weakness of the dollar, you can relate that to the direction of the major pairs. That is what I just said. Okay, so starting from here, what do we have? Okay, now I remember it was one of the sessions on this forum. I was saying that if we lose 104.5 and especially those 104 level, at that time, this trend line here, this trend line that you see here, was acting as support for price, was supporting price. And you can see that happened multiple times. We had the first attempt here to break below that trend line, but didn't happen. The second attempt right there, and then the third attempt right there. But price has stayed above that trend line all through that period. And then we also have this uh, higher highs and higher lows, which is typical of an uptrend. You see it right there, which is typical of an uptrend. Higher highs and higher lows. Now, eventually, we now got a break below that trend line. We now got a break below that trend line. I think it was CPI or PPI, one of those high impact news that caused this aggressive bearish move for the dollar. And then we lost 104.5 level as well as 104.0. Now, you would also notice that since price broke below this support area, okay, let me take it back a little bit so that we understand this. I need to take out these trend lines. Okay. Now, this green bullish candle here was the last candle that started this rally that we got here, this bullish candle. Now, when price closed above this, what initially was resistance, we haven't really seen any retracement for this green candle. Let me put a horizontal line there. So, no, let me put the text so it's better. Where are my arrows? Okay. Yeah, this candle is the one I'm referring to. Now, since we got this bullish candle that resulted in this rally, we haven't really seen any type of retracement back for that candle. And then this, for me, is the retracement that I was looking for this candle, this bullish long candle right there. Now, since this happened around 103.5 or so, 103.5 level. Okay. And then since that bearish move, almost immediately we also got this close back above. So price moved all the way, broke 104.5 level, broke through 104 level as well, and then found support at around this 103.5. And then we can see this reclaim of that level. Now, if you look back, you'll see this level at 104 has acted as support multiple times. Now, let me show you that. We got this level right here. And then we got this level right here. And eventually price closed below that level. And almost immediately, we are seeing a close back above that level. Now, usually when this happens, this is typical of a fake out. I remember I've also mentioned fake out multiple times during this session. Fake out. And fake out is simply a breakout that failed. And what does that mean? since we got this close below this support level at around price level 104, then we're supposed to get a follow through, meaning that from that point, from the points that breakout happened, we should have been seeing series of lower lows and lower highs, which is typical of a downtrend, but that did not happen. Price has now sufficiently closed back above that level at around 104. And usually when you get a pattern like this, a sweep to one side followed by a close back above, that is a bullish pattern for any market at all. And this kind of pattern is also a high probability setup, meaning that the likelihood of that market moving up is fairly good, or even very good, I must say. Okay, so now that price has closed back above this initial support level, throughout this period it was support, price closed below it, so we expect that level to be resistance, but now price is above it. So what it means is that the whole of the price level here is a fake out. And when fake outs like this happen, usually it will trigger an extended move in the opposite direction. So we got a close below that level, a close back above it almost immediately. So what I expect is for the dollar to be bullish in the coming days and to be bullish towards this resistance around 105. So if that is the expectation for the dollar, what it means is that the likes of Euro USD, Pound USD, we expect those assets to be bearish. Okay, so that's it for the dollar index. So now let's see how this relates to the major pairs. Starting with Euro USD. Okay, so this is also a trend line that has been very significant for the price of Euro USD. You can see that same trend line acting as resistance multiple times. We have this first attempt, we got another one. Now, this here is also the bearish version of what I showed us on the dollar index of a fake out. You see it? I'm going to put a text there so we see it. Right, so we got another one right there so that we can understand it better. Again here, look at this trend line here acting as resistance. What happened here? We got a close above that trend line and almost immediately price closed back below it. Now, like I said, for the dollar index, this is a high probability setup because we can expect price to move aggressively in the opposite direction of the fake out. And that's what happened. We got that sell-off. Here, price tested it again as resistance. Here, again, as resistance at this point. Here again, we got a close above it, a close back below it. And then what happened? An aggressive sell-off. And when the news from last week happened, we got a convincing break above that trend line. Even if you look at the weekly time frame, we can see that price, this weekly candle closed convincingly above that trend line. But what happened thereafter? Price has now found resistance around this price level, 1.0925. And what does that mean? You can see price closed a little bit above it and then back below it. This here is also typical of a fake out. This right here. Now, let me also show you why. If you look at this price level at 1.0925, let's look back a little bit. You see that same price level here acting as resistance. The same here, the same right there. And then if we continue to look back, we'll see how much that pivot point has acted as either resistance or support for price. And recently, like I highlighted, we got a break above that level and a close back below it. This right here is also a high probability trade setup because this is typical of a fake out. And then we're beginning to see some follow through. Now, this level 2 at 1.0865 is also a support point for Euro USD. And what that means is that number one, now all of this is happening on the daily time frame. All of this is happening on the daily time frame. I like to start on the daily time frame to, first of all, understand the overall direction, and then I can now tune down to a much lower time frame to look for entry opportunities. So while this is happening on a daily time frame, the bias that we have here is for Euro USD to be bearish. And if we expect Euro USD to be bearish, what it means is that we're looking for opportunities to sell. Okay, so let's head to H4. Let's head to H4, even H1. And then what do we have here? We see some sort of ranging. We see some sort of consolidation. So let's have this high at 1.09, this high right here at 1.09, and then support at around 1.087 level. Okay, so the way I'm going to treat this, number one, is to see a break below this low. Oh, sorry. Is one, to see a break below that low so that I can now take myself from there. Now, the reason I'm not going to sell at this current level is because it is now very close to a support. Now, if you are taking yourself from this high, that's very fantastic. However, if you are yet to join this trade, then the most ideal situation is to, or the most ideal scenario is to wait for, number one, either a break below this support level. If we get a retest, that would be fantastic. If we get a retest as resistance, that would be fantastic. And then we take sell from there. Except you're an aggressive trader, that's the only time you would go right in for a sell right now. Okay. So that's my expectation for Euro USD. Or if we get a bounce at that support, if we get a bounce, maybe a minor retracement at that support, then I may now take my sell after the retracement. I may now take my sell after the retracement. So these are the two things I'll be looking out for me to go short on Euro USD. Number one, a break below the support. If we get a retest, fantastic. If we don't, then we take sell and target lower prices. Or number two, because of this support, if we get a minor retracement or a minor bounce from there, then I'll be looking at somewhere around this price level to take my sell, which comes around 1.088 to take my sell. Adekoya says no audio. Is that right? Can you hear me? Please, I need us to confirm. I'm getting no audio from Adekoya. Is there audio? Is it good? Can you hear me? A1 is also saying we should get to AUD and USD. Yes, I'm going to get there very soon. I have it as one of the pairs that I want to show us. All right, I get audio is very good. Okay, thank you very much. Adekoya, you may have to check your end. Thank you very much. Okay, so that's the expectation for Euro USD. Moving on to Pound USD. Let's see what we have right there. Of course, and as expected, very similar to Euro USD. Again, we see some fake out levels right there. For example, back here, sometime in June last year, this price level here is around 1.3. Of course, it's a very important psychological level, 1.3. Now, you could see price close above it with this bullish green candle, and then we got a close back below 1.3. Now this is also an example of a fake out, and like I've said, for the dollar index, even for euro, when we see fake outs like this, usually it will trigger an extended move in the opposite direction, and it's also a high probability setup. If you add this to your set of strategies, I tell you, it's going to be very, very significant. Okay, so after that close back below, we got that aggressive sell-off. Again, price pushed higher back at that trend line, and then this right here is also a fake out. And what happened? Aggressive sell-off. Now, currently, let's go to what's happening currently. Now, again, all of this happening on the daily time frame. Okay, so right here, back at 1.3. Now, if we go back to June 2023, like that I highlighted earlier, we could see what happened with 1.3 level. Let me show us. Okay, now this is it right here at 1.3 level. We got a break above, it closed back below that level, and then aggressive sell-off. Now, with what we currently have, you see price closed above that level, but price was quickly rejected, and that's why we have this long upper wick, and then this bearish engulfing candle. And now, because this is happening at the same 1.3 level, what it also means is that we're going to treat the whole of this part as a fake out as well. You see, price closed above 1.3, but almost immediately, with the help of this bearish engulfing, we got it closed back below. So what it also means is that in the coming days, I expect that we see an aggressive sell-off as well, But because we expect that to happen, doesn't mean that it's going to happen exactly like that. So we're going to trade it level by level. So first of all, what I need right here is number one, I'm not going to be taking sell right away, except you're an aggressive trader. Now, I expect price, because it is now very close to this support level at 1.29. So similar to Euro USD, number one, I expect to see a break below 1.29, a retest as resistance, and then continuation. That's one. Two, we could also get, as we also analyze for Euro USD, a minor retracement or a minor pullback, and then from that point, price begins to push lower. You can see it's very similar to what we saw for Euro USD. So this is what I'll be looking out for both Euro USD, as we analyzed earlier, and even for pounds USD. Of course, they move in in the same direction. All right. So that's the expectation for pound USD as well. This is H4. We see it. This is H1. All right. So this is the level I'm watching. This is the level I'm watching. If you sell right here, you sell at the current price level, you may not get a decent risk reward ratio. You may not get a decent risk reward ratio because of this support level. So the ideal scenario, or the most ideal scenario right here, is to wait for price to break below the support, and then we now look for sell opportunities. Or you can jump right in for a sell for pounds USD, but you need to be mindful of this support level at around 1.29. Okay, so that's it for pounds USD. All right. Hopefully I get to gold very soon. Osoko is saying sell for Euro USD. It doesn't seem to correlate with bullish bias about this. It's very simple. If we say that the dollar index is bullish, now see this. Let me do this so that you understand it. Now this is Euro USD. The text now, not the chart. Okay, this is Euro USD. Now, if we have a bullish bias for USD, that is, we expect this USD as the counter currency here to be bullish. What it means is that we expect Euro to be bearish for this dollar to go up. So for Euro USD here, I'm expecting to sell Euro and then buy dollar. That explains the bullish bias for the dollar. So I'm interested in selling Euro and then buying dollar. That's what it means. So if we have a bullish bias for dollar, that is, we expect dollar to be bullish. What it means is that we also expect this euro to be weak. So I want to sell euro and then buy dollar at the same time. That's for Osoko. Yeah, thank you very much. I see Bamidele Olatunji also explained it to you. All right. So let's move to AUD USD. Yeah, fantastic. Now, I remember, I think it was last week, Tuesday. What was the date? Last week, Tuesday was 16th. Let me check the candle here for 16th. Okay, this right here. Now, this red candle was for last week, Tuesday. Now, I'm making reference to it because I remember last week, Tuesday, when I took this session, I was telling us that this trend line, very, very important. You can see it has acted as resistance multiple times. 0.1 right here, 0.2 right here, 0.3 right here, 0.4 right here before we got a break above that level. Now, what happened? This 0.68 acted as resistance, and then we got a break back below the trend line. Now, again, this here represents a fake out. And I remember pointing it out last week, Tuesday. So for those of us who took this trade, I'm sure you got fantastic profit from there. You see, this is also typical of the fake out that I've mentioned a few times. Mentioned it for the dollar index, for Euro USD, for Pound USD, and we can even see it on the AUD USD. So we got a break above the trend line and almost immediately price closed back below it. So this here is a fake out. That is a breakout that failed. Ideally, when this breakout happened, we should have seen a follow through. That is, price should have pushed higher from there. We should have been getting series of higher lows and higher highs, but that did not happen. Almost immediately, price closed back below it, and then the whole of this price level here is a fake out. And then when fake outs like this happened, usually it's a high probability setup, like I said, and it triggers a move in the opposite direction. And that's what we are seeing right there. Now, after this sell-off, we got this fake out and then this sell-off. It is now at a support level. Why is it a support level? If you look back, you will see here, 0.1 as support, even right here as resistance, right here as resistance, right here resistance, and you can see multiple points. And then if we continue to go back, we'll see more significant levels for this same price. Now, what I'm going to be looking out for here, again, because the dollar is bullish, we also expect this to be bearish. And right now, it is at a support level. So let's see H4. Okay, on H4, we're seeing that price is already breaking below that support level. How about H1? How about 1 hour time frame? Okay, the same. Price broke below that support. This year is giving us the retest. So what it means is that a fantastic sell on AUD USD. Fantastic sell setup on AUD USD. And then we can target lower prices from there, can target lower prices. And then as long as the dollar index stays above this 104 level, then we can expect price to continue to push higher towards 105, towards 105. And if we're going to get that, what it means is that the dollar continues to push higher, and then AUD USD will continue to push lower. All right. So for you, you asked me for AUD USD. That's right there. Very fantastic trade setup and trade opportunity. A1. Yeah, A1 is what I say. All right. It's good to have you here, Ajayi Oluwasegun Johnson. I wish you a happy trading. Alebode, I'm sorry if I got that wrong. Pardon me. When is it more advantageous to use the slanted trend line as against the horizontal? Okay. Now, the reason why we combine both, for example, let me see the one I can use to help you understand it. Okay. For this resistance here, right here, for this resistance right here, right here, right here, right here, this horizontal line is perfect for it. This horizontal line is perfect for it because you are seeing multiple touches at that horizontal line. Now, there are some instances where price would not return to the same point. What do I mean by that? So for instance, we have higher lows and higher highs. We have this. We have a push higher. We have a retracement, another push higher. Now, this is, of course, typical of an uptrend. Now, this uptrend, we can say started from here. So if I put my horizontal line here, I am only seeing this support level. How about this support level? How about this support level? Horizontal line cannot pick that level for you. And that's where your trend line comes into play. So what do? You simply drag it this way so that you can pick those support level. Now, this is also a support level, but it did not return to the initial support level. Now, let me do this. This is your low. This is your low right here. This is your higher low. And then this is your higher low as well. Now, your horizontal line cannot pick these higher lows because it did not return to the initial support point. So this is when your trend line can be really helpful to help you mark your support level. So this is support here, this is support here, this is support here. You see the difference between the horizontal and the trend line right there. All right, I'm happy you got that. Okay, so that's for AUD USD. Moving on to EuroCAD. Moving on to EuroCAD. Now for EuroCAD, quite let's see. For EuroCAD, I also remember pointing out this level here on EuroCAD. I remember pointing out this level. Now, if you look back, you can see how much this horizontal line here has acted as resistance at price level 1.4765. You see it, 0.1, a few pips to that level around here, the same level here, even here, multiple touches, and then we got a break above that level, and then price was unable to follow through aggressively, and then we got a close back below it. Now, as it is, price is now close to this resistance level. Price is close to this resistance level. So let's head to H4. Let's head to H4. All right, now that's the resistance right here. And then we can see price has been pushing higher. You can see price has been pushing higher for EuroCAD. And currently we're seeing a retracement. So this retracement right here, number one, I'll be looking out for this level. I'll be looking out for this level to buy, or this level for EuroCAD. That's what I'll be looking out for. So if you are trading EuroCAD, or you want to consider adding this to your watch list of instruments, then this is a good one to also add to it. Number one, if we get this current move lower, if we see some kind of reversal pattern at this level, okay, let me use moving average. I like to use 50. Okay, this is moving average 50. And this moving average 50 is being used as support. It's being used as support. So this current price now, we expect it to come towards this moving average, before we begin to see higher prices. So if you are interested in EuroCAD, you may want to wait out for that to play out before you jump right in. And then oil too. I see gold, I see pounds JPY. Okay. So let's hold on. Okay. And then even on oil chart, we're also seeing the fake out play out right here. You see it? Price closed above that resistance. We got a close back below it, and then we're seeing this aggressive sell-off. Now, that means that we'll be looking for opportunities to sell. So if you trade oil, opportunities to sell. Now, this is happening on the daily time frame, and then you may want to tune down to a much lower one, H4 or 1 hour for entry triggers. Number one, I'll be waiting for price to come back to this level, or this level right here. So what does that mean? When price returns to this, of course, initially it was support, price broke it, so we expect price to retest it as resistance. So when we get that retest, and I see a reversal pattern right there, then it will be a good opportunity to short oil. Or if we don't get a reversal pattern right there, then price may push higher to this 83 resistance level, and then I'll be looking for opportunity to sell right there. And that's how I'm going to be trading oil. Adeshola Wasiu is very simple. You see it as one of your instruments. You see it as one of the assets that you have. This is Market Watch, for instance. You're going to see the USD index as one of the assets right there. Yeah, for me, this is mine, USD IDX. So you can also do the same to locate it on your Market Watch. All right, so that's for oil. Now let's look at pounds JPY before we then look at gold. Pounds JPY. Okay. All right, now pounds JPY has been since the beginning of this year has been uh, aggressively bullish, has been very bullish. Now, only recently we're beginning to see some meaningful, significant retracement. Now, initially, I was watching this 200 price level. Here, we saw this long upper wick. We testing that 200 level, and then we got this aggressive sell-off. Price returned to that same 200. We got this sell-off and then a break above it. And now we're beginning to see retracement. Now this retracement may continue to push lower back to this 200 price level. Now what happens when price returns to this 200 level? Two things. From that level, we may see a minor retracement. Now, except you're an aggressive trader, that's the only reason why you would jump right in for a sell right now towards 200 level. Now, for me, this is not how I trade. I'm not going to be taking sell right at this point, even though I know that it's going to sell towards this 200 level. It's going to sell towards that level. But based on my trading strategy, I'm not going to take a sell. But of course, it's a good one if you want to take a sell. So what that means is that what I will be looking out for is number one, to see a break below 200. Number two, see a retest of 200 and then take my sell trades from there. This, in a way, will give me a decent risk reward ratio. That means that if I take a sell here, I can put my stop loss above that sell and then target lower prices. Or this is number one. Number two, when price push to 200, from 200, we see a minor retracement and then target sells from there for pounds JPY. I can't remember the person that asked for that. Adeshola Wasil. I hope that's you. Redmi 10A. I can't see your name. I see your phone model, Redmi 10A. We talked about pound USD already. We talked about pound USD. When we have a break without retest, what do we do? Yeah, it's still okay to take a sell. When we have a break without retest, it's still good to take a sell. But if we do get a retest, it is even much more fantastic because it gives you a decent risk reward ratio. But if we get it, sometimes you will get a break without a retest. It's still good for a test, for a sell rather. So what that means is that you allow price to break below that level and close below it and close below it. Well, there's really no best MA for trading. It depends on exactly what you're looking out for. We have short term, we have long term, we have short term, we have medium, we have long term. 21 moving average, short term, 50 mid-term, and then 200 for long term. So it depends on exactly what you're looking out for. Johnny Irube. Is it on 1 hour or daily time frame on pound USD? Pound USD. 1 hour. 1 hour was the 1 hour chart we used for the analysis. Now we started on daily. We have a direction. And then even if you tune down to 4 hours, 1 hour, or 30 minutes, you are still looking out for the same setup, the same setup. Now, this is gold. This is gold. What's happening on gold? What's happening on gold? Now, I remember pointing out this head and shoulder pattern for quite some time. So we have head. We have head right there. We have the left shoulder. We have the left shoulder, and then around that area, the right shoulder. Okay, now this here, of course, is a bearish reversal pattern, head and shoulder. Now, for it to be further confirmed, we now need to see a break below the neckline, which comes around 2280. Now, this move right here did not close below the neckline. So that's how I knew that it's not yet ready to give us lower prices. And almost immediately we got bullish engulfing candle, and then price pushed higher. It is now back. If you look at this trend line, very much valid. If you look at this trend line, very much valid. And then from that trend line, price has tested it multiple times. We have 0.1 right here, 0.2 right here, and 0.3 right here. And then we see this reversal pattern. This is more like a bearish Arami. And then price is beginning to push lower. What it means is that we're going to be looking for opportunities to sell, opportunities to take sell trades, opportunities to sell. Now, let's see. Opportunities to sell. Okay, so number one, I want to see a pullback. I want to see a minor pullback. First of all, I want to see a minor pullback before I take sell, or this level here at around 2390, we can also say has acted as resistance. 0.1 here, which is the right shoulder, 0.2 right here. So currently, that same level at around 2390 is also acting as support. So I'm looking out for this as resistance and this as support. This as resistance 2437 and support around 2390. So the way I'm going to trade this is to see a break below 2390 before I go short, or a retracement, or a minor retracement, maybe back to this moving average, or back to the resistance at 2437 before I take sell orders. Now again, because it is also sitting at support and we are beginning to see some bullish pattern right there, you may also want to take a buy trade. Now for me, that's not how I trade. I would rather wait for a pullback and then take myself from there, or wait for a break below that support area at 2390 and then take myself from there. Okay. Yes, we touched on Euro USD. We did not look at USD CHF. Trade entries, either 1 hour or 4 hours. I don't know if this is Jennifer. Audio is not bad. It's from your end. USD JPY. USD JPY. Okay. Let's quickly touch on USD JPY before we call it a day. USD JPY. Now, USD JPY also very fantastic. And you can see it looks so much like pounds JPY. You can see it looks so much like pounds JPY. If you compare this chart with this, you can see that we have quite some similar pattern right there. Okay, so let me go back to USD JPY. All right. So again, for USD JPY, we see this very aggressive bullish move up till around price level 160, right there, 160. Now, when price broke above 160, ideally, we're supposed to continue to see higher lows and higher highs. Price would continue to push higher, but that did not happen. And this right here is typical of a fake out. So I have shapes and then mark this level. You see, so this is typical of a fake out. And then, like I've mentioned quite a number of times, when we see fake out like this, usually it triggers an extended move in the opposite direction. Price is now back at this support around 155. So from here now, and because the dollar index is currently trading above 104, then I expect to see bullish move from that 155 level. I expect price to be bullish from 155. So how do you trade this? This is happening on daily. This is 4 hours. This is 4 hours. So number one, you may want to wait for price to come back to 155, and then you take your buy trades from there. You take your buy trades from there. You take your buy trade from there. Or at this current level, you see it also very significant at this current level. If we do get a reversal pattern right there, then it may also be a good time to go long for USD JPY. When I open an instrument, I'm looking out for the important levels. One, number two, before the important levels, first of all, I'm looking out for the direction. The direction you can get on a daily time frame. You need to understand the overall direction, whether it is bearish or bullish. If it is bearish, you look for opportunities to sell at resistance. If it is bullish, you look for opportunities to buy at support, and you can tune down to a much lower time frame to do that. All right, I have to quickly answer that because we're now past closing hour. Okay, don't forget, we have, especially for the people who are just joining for the first time, we have our beginners class from should be 10 a.m. We have our beginners class. Yeah, this is it right here. We have our beginners class from 10 a.m. Here you would understand the basics. You would understand the assets, the instrument. You should find time to also be a part of our beginners class, especially if you are new. All right, this is where we draw the curtain for today's edition of our morning market review. Join us same time tomorrow from 8 a.m. where we're going to also analyze assets. Thank you very much for joining. I wish us a happy trading day and week ahead.